Okay, so we are starting now. Why I'm taking this course again is to make sure we all get used to this concept of margin management. People discuss about risk management a lot, but if you don't understand how to relate it with margin or pay attention to margin, equity, leverage, and free margin, it will be a problem to you. Some people lost their money. It's because of they don't have understanding, a proper understanding and application of margin, free margin, and how it affects their equity and how it also how it related to their leverage. So it is designed to make sure you will not lose your capital if you are trading, unless if you just want to. You know, why I say like that, because there are people who are using flippers. Flipping strategy means they can use the entire money to invest in a particular asset class, and they could make a lot of money from it. Some of the posts you see on internet that has outrageous profit, if not manipulated, some of them are flipping strategies. They flip account and make a lot of money and do a screenshot and send to you. Some could be manipulated. So now we are discussing it using margin. And we're gonna do practical, and we're gonna do like theory part of it. So let me use one of the students that I knew here. I think Opeyemi is new. Opeyemi is new. So Opeyemi, I think you have known the definition of trading. Either definition of forex trading, definition of commodity trading, and of course equity. Though a lot of us are not trading equity. I think we have run the definition to you, right?
I've had some video, even though I've not finished them, but
Yeah, because of that, people are not able to finish some of the videos. That's why we decided to make sure once in a while we repeat all these classes, because we discovered that sending video to watch at the end, many people are busy. They may not be able to watch all of them. Yeah.
yes.
Now that is why we are bringing up this topic again. So now, when we are trading in this market, it is done on margin. Like a simple definition of trading. If it's currency pairs, we said trading one currency against another. But the proper definition we use is trading one weak currency against, okay, let me put it this way, trading one strong currency against a weak currency. Now, that is the proper definition. And since it is done on automated platform, it's not like Bureau de Change where you could be looking for a physical person to buy it or sell it. So automatically, you can easily like trade automatically using the high volatile currency pairs in the world that is also referred to floating currencies such as pounds, euro, dollar, yen, Canada, those currencies that are floating based on demand and supply ratio of the country that are using them or the usage. So now, but in this business, if you want to do it on the traditional way, you can just use your $100 and exchange to euro. Maybe you can get 102 euro. Am I right? Or no, you may get 98 euro. Am I right? Or you can get maybe 95 euro, 96. Am I right?
Yes.
So that is also forex trading. That's currency trading too. Then you move your euro again. Maybe the euro goes up to 98, or to like move up a bit,
Right.
where the value is now 98 or euro. Then you can move it again to reset that euro back to the same person. You may get $101, $101, or $102. That is also it means on that note, you have made about $2 profit on the $100 you exchange back to euro, and you have pushed it back to dollar. That's trading. But now what you made there is $2. Do you understand? But here what you made here will be 200 pips. Let me type it. So do you understand my explanation now? So what you made on by kind of exchanging your $100 on a physical bureau de change, maybe at the airport, to euro, and change it back from euro back to dollar, and automatically the $100 the bureau de change operator give you 102. So you have made $2 profit. But in trading, so $2 equals to 200 pips. Do you understand? So in trading, $2 equals to 200 pips. Why in the spot exchange or the bureau de change or in the foreign exchange market, what you will see in your bank will be $2. Now, why will it be 200 pips? Is because trading here is done on margin. Do you understand? Because of trading is done on margin. Now, somebody may be asking again, what is this margin? The easiest way for you to understand margin here is based on the price formation. I just want somebody that is in a quiet place. Maybe you're just taking coffee or maybe some chilled beer. So we could be talking while you're still taking your beer, so that we'll be flowing. This is one of the best classes. It could be drinking, even if you want to smoke, if you're in a smoking zone, then we could be talking so that we know that I'm teaching.
Yeah, we feel.
So I don't know whether you understood my explanation now. I just want to make sure it entered in the most simple way. Do you understand this explanation, Poyemi?
Yes.
Please, can you just explain it?
Okay. So what you just explained was that if I'm exchanging maybe my currency on a normal day or on the counter, like say like an airport, and I've been able to gain $2 on that exchange, I can see that $2 in my account or in my pocket, however. But if I'm placing a trade of that same, let's say that same value on the platform, and I'm gaining $2, that means I'm doing 200 pips. And the
Yes.
reason why we are having pip is because Forex trading are done on margin, not like the physical transaction.
Yes. Yes. And what is that example of margin?
Example of margin.
Yeah, and I mean, the easiest way we can understand it.
Yes, from the video you sent about 2 days ago, one link of about 25 minutes training, I watched that one. So from there, I was able to understand that margin is, let's say, like the capital. No, not the capital. How will I put it? Let's say,
Okay,
for
no.
instance, now I have $500, and out of that $500, the one I am using to trade. Let's say I trade with $200. That $200 is the margin, is the capital that I'm using
No.
to run the business.
Yeah, but that's another type of margin. I will explain. Yeah, but you are right, but you are already going on a higher level of the
Oh,
margin. Yeah.
okay.
So I was trying to explain the common way why this is 200 pips. Is because it is done on margin. I mean, the price of the Euro USD here is on a marginal price. And what is that marginal price? Instead of getting €1 to dollar, which is like 1.32, look at this thing I'm trying to circle here. That's 1.32. Do you understand? So on a margin, you could get it by 1.32717. So it will not be on 2 decimal points, it will be up to 5. Do you understand now? So kind of it's common primary example of margin, of that's showing you that the trading is in a marginal form. So now it means on electronic level, each of these things count. So for us to get $1 here, it means it has gone 99 cents. Do you understand? Then for us to get $2 here, it means 200 cents has been exchanged in the market, giving you $2 profit. Now, because you trade it on margin, each of these cents count as a profit. So that is why somebody who trade on spot could make $2. You could make $200. Do you understand now? Now, now on commodity trading is also applicable the same way. It's also done on margin. For example, this is $68.09, for example, on oil. So for the price of oil to get to $69, it has to go to 99 cents for another $1 to add here. So if oil gained $2 in a day, that means it has gained 200, because we could see the price on a decimal point, which I will also refer to marginal point. Do you understand now?
Yes, I think I understand it now. You did
Yeah.
understand.
So now on this point, this marginal point movement is how we measure our profit. It's also how we calculate our loss in trading. It's very much easy. Like as I explained now, trading is buying one currency against another. Or if it's on commodity trading, buying and selling of commodities. So we could buy the commodity in spot, we could buy them in CFD, or we could buy them in futures. And how do we make profit? We make profit from the rising and falling of the prices. And the advantage of it is that the market is very much liquid. We don't need to look for a buyer, we don't need to look for a seller. The market automatically has a lot of buyers and a lot of sellers. So any order you want to execute, the broker is always willing to execute that order. Unlike some of the spot market where you will post your order, it can take 1 week, 2 weeks for your order to be matched because there's no much liquidity. Now, another level of marginal I want to discuss here is the one I asked ChatGPT to explain to us. They say I asked him to explain to us margin in forex trading. So now he said refer to the amount of money a trader needs to deposit with a broker in order to open and maintain a leverage position. Now, this is that second definition you are going into to pay me.
Yes.
Now, in the trading term, it's called security deposit. Do you understand? So it's like security fund. And in a simple term, margin is like a security deposit that allows you to control a large portion or a large position than you are in actual capital. It's not a fee, but a portion of your fund, your own fund, set aside by your broker while your trade is open. Now, since it's a portion of your money set aside by your broker, it means you can use maybe 10% of your capital can be used, 1% can be used, 5% can be used. That is why in trading, it's not something you could use all your money at the same time to trade. It's something you could use portion of your money. It means you are in charge. On that concept, if you pay attention to it, even if you place a trade immediately, you could see the margin given to you. You could see the free margin available. Then you cannot be able to know how to manage your money. Now, he gave us another example. It says, suppose your broker leverage is 1:100. This 1:100 means 100 times. It means your capital is multiplied into 100 places. So now, for example, if you have $1,000 and you're on 1:100, that means $1,000 times 100. It means your capital, your $1,000 has a capacity to trade $100,000 account. Okay. It's also being displayed here. I'm not even reading from it. I'm seeing it already. You need $1,000 to control $100,000 position. Yeah, the same way if your capital is, if you're using 1:10, it means your $1,000 is in capacity of $10,000. Now, let me explain to you about free margin. So free margin will now become the available fund to open new position or to withstand the one that you're already trading. Now, look at what it says there. It says losses. Do you know why it says losses? Let me talk about ask experienced person. Felix, you've been here for a long time. So do you know why the ChatGPT said to withstand losses? That's free margin, not margin again. Probably, if you're not in a where you can talk, you can type. Okay, probably, okay, yeah, he has dropped a message. He says, sorry, I can't talk right now. Oh, yeah, I can
Can
see.
I try?
Yeah, try.
Okay. So I think free margin, based on the understanding I thought I have. Now, after we have a trading capital that is already running in the market, which is the margin, the free margin is the available money remaining. Okay, so this one say or to withstand loss. So
Yeah,
let's say the one we place is already running at loss. That free margin is the one that we use to cushion that trading I don't know, the one that is already being traded. So that free margin is the one that is supporting that one. That is what the market will be trading on, while this other one is in loss.
Yeah. I trying to understand what I want to explain. Now, remember that your margin was the one that was used to open the trade.
Yes.
So now, why the ChatGPT describe it as withstanding losses? It can only happen if the trade you're trading, you have already lost up to the margin you use in opening the trade.
Okay.
Then, so instead of broker to close their trade, since you already have free fund, which is free margin, your free margin will now be holding the position. Do you understand that now?
Okay. So
Yeah.
I think you said let's say the trade that is running now is in loss, and the loss
Mm-hmm.
is, let's say, to the value of the margin that we have
Mm-hmm.
placed.
Mm-hmm.
So the free margin is the amount that the broker is still using to hold the trade for us.
Yeah. Automatically, the broker will be taken from a free margin to be holding your position. So now,
Sorry, Mr. Uche. Sorry, please.
okay.
It's also possible from that free margin, you can also place other trade, right?
Yes.
Okay.
From
Yeah.
that free margin, you can also place more trade.
Okay.
Mm. Do you understand?
Yes.
Now, because let's say you have $10,000 account, I like to call big money because in this business, to tell you guys the gospel truth or the honest truth, if you have big money, you can hardly lose. People that have big money that is using a good platform does not lose their money. So people are losing money because of two or maybe few things. One, they are coming with small money to test the market. Two, the type of platform they are using. Three, the strategy they are using. You don't understand. But people that has big money hardly lose. So if you take back to this system, check where we have been buying for more like 6 months now. Maybe if there's a trade that have closed at loss, go back there again. See that the market has also gone back to those trades after like a couple of months or weeks. Let's say Emmanuel has been trading for a while now. Let's say that the trade have closed at loss. If you go back to that market now, you may see that the market later went back there where it's supposed to have gained. But your own have closed. Would you know why? Because of the kind of capital we are using, we can try to put those in. But big people who are trading with a good amount of money hardly lose money. That's why I always encourage anybody to start with something big. Unless if you don't have it, no problem. Now, what I'm saying is this. If you place a trade and you'll be monitoring your margin, you see it how much broker took from you. Then when you also place another trade, you also see it how much broker took or takes to keep that trade open. And now as a trader now, you can also put your stop loss or set your limit according to the margin you are using. Then, but one important thing you need to know about this is that this margin is taken or is determined by the leverage. Please take note. The margin you are using or the broker will giving you is determined by this leverage. For example, somebody using high leverage will be given more free margin to trade. While somebody using lower leverage will not be given more money to trade. More money is like your money, the broker will not be giving you much exposure to your money when you want to place a trade. Now, look at what I mean. Let's say, for example, you have let me write it on the whiteboard. Now, let's say, for example, you have $10,000 and your leverage is 1 point maybe 500, and there's another account with the same $10,000. I hope you can see what I'm writing. $10,000. You're not seeing my whiteboard.
I'm seeing the whiteboard. We're not seeing what you're writing.
Okay. Oh, maybe because of okay, you can see what I'm writing. I'm typing.
Yeah, it's just small.
Okay, like this. Is it good now?
Mm-hmm.
Someone's trying to type. Don't type so that you. So now let's say another person has $10,000, and is using a leverage of 1.30. Now you see that this leverage now, this particular leverage is smaller. This leverage now is smaller than this leverage. So this is a bigger leverage. This one is 500 is a bigger leverage, while this one is a small leverage. So now if the person of this $10,000 the person of the person that is trading with 1,500 leverage, this guy, Let's say this guy places a buy, for example. The broker is most likely going to take maybe a buy, sorry, let me put it this way, a buy with one lot or one unit. Then the broker may take about $2,000 margin. The broker may take about $2,000 margin to place this particular person trade. And now his free margin, let me put it FM, will be $8,000. Because of space, let me put 8K. Do you understand? Because of $2,000 margin was taken, the free money remaining will be $8,000. But if you see this guy, this particular guy here, of 1:30, let's say he placed a trade of the same value, the same buy with one lot, and the broker takes $2,000 to open that trade. Then remember, ideally, his free margin will be the same 8K. But he cannot open another trade. This particular person now cannot open another trade because using the same volume or the same lot size again. And then now some brokers, where I don't want to use all the brokers, although we'll demonstrate it now. Some brokers may give you free margin here, as this happen now, may give him free margin. Maybe the free margin here is FR. Free margin here, maybe some brokers may be so realistic that they can give you free margin, maybe 500. Do you understand my explanation now? Some brokers will give him free margin 500. So because he used one lot to place the trade, and the $2,000 margin was taken. Ideally, he should have $8,000 left as his own free fund, but the broker will only show him only $500 free margin. The reason is because he uses one lot to place that trade. So now he may not be given much chances again to place another trade using the same one lot. Why this person use one lot and play the same trade and may be given more chances to place another trade because of he has a higher leverage. So the difference with them is all about leverage they are using. 1:100, 1:100, and one is to 500 and 1:30. I don't know whether this is very clear or it's complicated.
Okay. Hello?
It's clear
Yeah, with
because
you.
the more margin you have, the more leverage you will have.
Perfect. The more margin, so I would rather say the more leverage you have, the more the free margin you will have.
Okay, sir.
Yeah, the more leverage, because leverage is choosing when you want to open the account. The more leverage you have, the more free margin you will have.
Sorry,
Mm.
Mr. Uche, is it possible to readjust your leverage?
Yeah, but not by you again. A broker can only do that. So if you send a broker
So,
email, tell them I want to adjust it the way you tell them the particular leverage you want, then they will adjust it. For those of you within the Eurozone, Australia, UK, EU, I think part of America too. Why many brokers are leaving those areas? One of them is because of margin regulation. They told brokers to give only 1:30. Yeah, only 1:30 to retail traders, and the brokers doesn't want to do that. They said if anyone want to increase their leverage, should be a professional trader and should sign some certain document to show that, you know. And the broker want to give you big leverage, because the leverage can work for you. It makes the broker to make more money because you can make more volume. And of course, it can also work against you because the more exposure you have to the market, the more risk you are exposing your investment to, and the more chances you are going to have a bigger return. Of course, you may also have chances of having losses. So regulators always want to regulate the side of loss, why the brokers didn't consider it very cool. And there are a lot of things, but this is one of the major things. This regulation came into around 2009, 2019. That's when many brokers began to fade off within the Eurozone, started looking for alternative. Somebody said, but they both have the same amount of leverage. No, they don't have the same amount of leverage. They have this one has 1:30 leverage. This one has 1:500 leverage.
Mr. Uche,
Yeah.
please let me ask. So in this example that we are looking at now, so these two people, let's say they have placed one trade each at 2,000 margin that was taken. So for instance, now, okay, this one that is on leverage of 1:30 has free margin of 500 remaining. And the other one 8K. So let's say their trade now, this 2,000 trade goes into loss. What will be their balance? Is it this 8,000 for this person and 500 for that one?
Oh, hey, it's a good question. So now, if all of them are trading and they are going into loss, remember that this margin fund here is constant. You see this one? It's constant when you are trading. They are trading. So let's say now they have minus $1,000. Their free margin will still be the same, will still be constant. Even this kind of free margin will still be constant. They have minus $1,500 minus the margin, free margin will still be constant. The whole thing will still be constant. But once they have minus $2,000 or minus $2,010, like more than their margin. I mean, once they lose more than their margin, then the free margin will not start supporting the trade. So this one will have 8,000 to support, or this one will have 500 to support. You ask a very intelligent question. Do you understand now? Now, there's a loss. This one now have lost, is losing $2,000. Remember, balance is 10,000, but a trade is already losing $2,000. This person trade too is also losing $2,000, but they're not of the same leverage. Of course, they are of the same margin. Now, this guy will be having more $8,000 to trade more, while this one will having about $500 because his leverage is small. Do you understand? So now, what will happen will be this. If this person lost 2,500, which is part of this free margin, all his trade will be closed. This trade will be closed. Yeah. So
what will now remain on the account? Nothing.
Yeah. So what will now remain his balance will now be 8,000 will be 7,500.
Okay, it's not as if the account will wipe off.
No,
Okay.
no. Now, that's why in Europe, many people that don't, people that follow, people that trade within the Eurozone don't lose their capital because of those, all the small, this leverage the regulator recommended makes it impossible naturally for investor to lose his capital. One is to 30.
Sorry, sir. So, hello, sir.
I'm with you.
So with that stop loss, when the 2,000, this thing, the 2,000 that they collect from your margin end, they will stop you out.
No.
With that stop loss, without putting stop loss.
No, they won't stop you out. If the 2,000 taken from your account is already at loss, your free margin will be supporting the trade automatically.
And if you don't close until your account is wiped up now.
Yes, so now, let's say this person now, this trader now refuse to close, and of course, assuming there's no stop loss, so the $8,000 will keep going. Do you understand? He may have more minus. He may have minus $5,000, $6,000, $7,000, and keep going. Do you know the reason? Because of his leverage is 1:500. It means that it's on high leverage, meaning that all his money is in the market. That is 1,500. I think 1:5. 1:500. It means. I understand it quickly, 100 to 1, 1,000 to 1. So this is 500 to 1. That's 50,000, yeah? Yeah, 50,000. So it means that this is $10,000 account has capacity of $500,000. So now, because of that, and it's a high leverage, so this pretty much will keep going. Maybe he may keep losing more, and there's no stop loss. But now, you see this guy of 1:30. Do you understand? This guy of 1:30 now, the free margin given to him that's left for him to trade more is 500. So by any chance, maybe no stop loss, no risk management. So the trade keep going against him. He lost 2,500. So remember, this is the margin. This is the free one. So the free fund finish, added to the loss. Automatically, his trade will close. The whole trade will close immediately. The broker will close all his trade.
Without blowing his account.
Yes, without blowing his account. Because there's no other free money to hold the trade. Free margin is what holds your trade. If the margin you have taken to invest in that particular project has gone into the business, has gone into losses.
Okay, so does that mean it's advisable to trade with a very low leverage?
So now you're gonna advise yourself that one. Based on your appetite and tolerance.
A professional advice.
So do I need low leverage, high leverage, low margin, or high margin? I do know that ideally, even if we use high leverage too, it can adjust your margin because the whole thing is controlled by the volume. Do you understand? The whole thing is controlled by the lot size you use or the unit you use in investing. For example, it's like when you have $1 million and you buy 5,000, you buy the same 1 million unit. And somebody have $1 million and just buy only 10,000 units. I'm using the stock market example now. Do you understand? So the more units you are holding, the more exposure you have to the market, and the more profit or the more return you're gonna make. But just that you have more exposure. Exposure means risk. So the less unit, less exposure, and less return. But bear it in mind, people come to this market to make money. They're not here to save money. All of us have savings account. So if you want to save money, we won't even come to the market. And that's also why the market is attractive. Oh, but it's not that they are here to be reckless, but they want to take the calculated risk. Opportunity that when they strike it, they hit it big. I mean, I don't know if this thing makes sense.
You eat it big and go buy the house that you dream of.
Yeah, you buy the house and do whatever you want to do. That is, if capital market is not volatile, not this, nobody will care about it. That's the truth. Nobody will care. People only come here to make money. So it's not where they put money is still there. No, they just want to make something. It is now when you have made big money, you can now buy the house. That house, you don't want to lose it. It become like a bond. Or if you're tired of real estate, you can now buy maybe treasury bill and keep the more money there. You know, it can be stack of cash. They'll be giving you something. Those are like security. But stock market, forex market, crypto market, commodity market, we are here to make money first before you talk of saving. And now somebody who don't get money will save. I don't know whether this explanation is clear.
Yes, sir.
Okay. There's one video. I don't know if there's another question. We have new people here. I want to make sure that they're not confused. There's a new person. What's her name? Yeah, Finny. Finny, are you confused with this or you are okay? I'm sure she's cooking or she's kind of doing something busy. What of Cynthia? Cynthia is quiet. One thing about Zoom meeting is that it may be on the Zoom, somebody will be doing something else.
So I'm here, or I'm actually here. But another question I wanted to ask here. I notice, which sometimes makes me not to take trades, is when you begin to hold trade, especially with all these brokers, or you by the time your profit hits, swap, commission, everything will take almost half of it. That's something I noticed. So I don't know if there are platforms that doesn't even charge commission for commodities, or okay, maybe they charge commission, but not swaps.
Yeah, of course we have them. I know why brokers introduce those things. I know them. So some of the brokers in Nigeria introduce it to make sure. It's like let me not use other words. Let me just use the business word. They just want to be making money from people. Do you understand?
Yeah, but the thing is, I'm not even using Nigerian brokers, even if I'm to use brokers.
It doesn't matter. So they check the jurisdiction where you're coming from. They are just adding those in that to be making more money from people, like ripping people off. So
I'm
we
not
have brokers.
That's what I mean, though.
I know. Most brokers are doing it now to rip people off. Yeah, including those in Nigeria too.
Okay.
And which is not good. Some of them charge excessive swap. And so at the end of the day, you see that they have charged you spread, they have charged you commission, they still charge you swap. You know, like looking for a way to just be making money from you.
Okay.
So there are brokers we use that doesn't charge swap. If you want, you can use those ones. Yeah, like one of the brokers I worked with for almost like 10 years, we used to click that we are Islam. So if you open an account and you tick Islam, you are, that you want Islamic account. If you put Islamic account, it's a swap free. So
which brokers can you recommend?
No, I'm recording this and I won't mention it to you, but I will send it to you. I think we have, I don't know if you have your number, we'll chat you on WhatsApp and send it to you. Because it's recorded, so we're gonna post it on our page. And if we post it there and people be watching it, it means we are promoting them for nothing.
All right, that's okay.
So we used to we don't open no more trade like we open on Islamic so that we keep that swap free. Imagine you're using big volume. I trade for a long time, 1 week, 2 weeks, 3 weeks. Each day they keep charging you swap. You may discover that they have charged you more. There was one company I managed fund for their clients. It's a big company in the UK. But if you see what they're charging their people swap, it was so funny that I'll make money. At the end of the day, almost half of my money I made for their client has already gone to swap. So I just left them. So I'm still my contract with them is still valid, but I'm no more trading for their client again because it was even affecting me, affecting my performances, and I don't want to argue about it. I say okay, they are a broker, they are liquidity provider. It means they are actually B-book by themselves. Since they're also liquidity provider and a broker, it means they are the one paying the profit. They're also the one providing the brokerage. So now you see why they are putting those things so that they will make more money and manage their own risk. I don't know whether this explanation is very clear because I want to play that video again for 20 minutes. Then we ramp up and go. We need to end in the next 1 hour, 30 minutes. We have spent 1 hour already in the next 30 minutes. Is that okay? Then after that video now, we will now do our own practical, or which one do you guys prefer, the video or the practical first?
Let's watch the video first so that we'll be able to understand what we are doing in practical.
Okay, perfect. So now this is the video that we shared before. Now look at it. It's just about 20 minutes. I was interacting with this client one-to-one, educating him on this. I don't know whether this was a live account, although it doesn't matter whether it's live or demo. It's all the same thing. So we're using to practice then. Just watch it. Let me start afresh. I hope you can hear the recording audio, right?
No.
Has it started?
Yeah, it's playing.
Oh.
Okay.
So we are not hearing it. We can just do the practical, then we send this
Can you hear it now?
No, we
Telegram.
can't hear.
Anybody who doesn't.
Or maybe we should go to the practical.
I'm increasing the volume.
Because the volume, we are not hearing it.
Imagine what? Imagine equity and the relationship. There are a lot of information you can get. You can hear it now, right? At least on internet. Yeah. Any question?
Yes.
Okay. And those people who claim that they blow up their account, they lost money is the reason. So this is the reason. They don't pay attention to margin, remargin, and the margin level. Yeah. As you can see now, your trading is switching you, you're entering or trade because you're seeing 1,000. You also see 990 something. For your mind, you may think that you have money. But in the market, you have used $660 to open a trade. Yes. And what is remaining for you as free money to trade more is $335.40. So remember, you're only having -4. You understand what I mean? Okay. Go to new order again. Okay. Go to new order. Okay. Don't make a mistake because it's being recorded. Any mistake you make will not. You're going to record a screen. So select maybe 0.5, 0.05, 0.05, 0.5. Okay. Then buy again. Yeah. So come back to the profit side. Maximize this thing, this chart. Go up and maximize it. Second one, yeah, that one. Yeah, perfect. So scroll down.
Okay.
So you see that your margin is now 232, 233. Sorry, your free margin.
Yeah.
Yeah. And your margin is 760. So then if you add 760 to 240 something, yes.
Yeah.
Then from 233 it's not 241 because you are gaining $5 and it has entered to 249. You are getting $9. It has entered to 45. Now, the more you gain, the more you have more money to trade. That's what it means.
On the free margin, right?
But free margin means available amount of money to trade more.
Okay.
It's like when you buy a product, you're a dealer of maybe a car dealer. You bought some fleet of cars, maybe 10 pieces of cars. That is your margin. All your margin has gone into the business. Let's say you have about 50 million, you use 30 million to buy 10 fleet of cars. So what you have gone into your business is 30 million, but your business capital is still 50 million.
Okay.
Now, if you sell about 5 of them and make more profit, what will be available as a free margin, which was 20 million. Let's assume you sell 5 of them with a 20 million profit or 20 million price. So now your free margin will become 40 million.
Okay.
Yeah, because the more you sell, the more you have more money.
Yes.
The more you sell, the more you have more money back. So now, if you're actually selling on profit, the more you have more money coming back. That is the same thing when you place a trade and the trade is running on profit. It will be adding on your free margin, giving you a sign that you have more money in case you want to trade more. Then it will also be adding on your equity, so that your equity will be bigger than your balance. But your margin will be constant because that is the money that was kept aside that was gone into the trading. So if you are a high risk trader, that's where you see people to keep trading, like opening more positions. If the market should move in their favor, they will double their account. Like they can tell you that they become rich within, they make a lot of money. Sometimes they can't even explain how to make the money. It's because they're taking a high risk. They are using almost all the money to trade. But let me tell you something. This margin is powered by leverage.
Okay.
Yeah, the higher the leverage you choose, the higher you give opportunity to make more positions. So during the time you have already indicated interest, please allow me to trade money. And that's what leverage means here.
But sorry, excuse me, this one, we are not leveraging now, isn't it?
I said, when you are opening an account, there's potentially leverage you choose. That leverage is what determines how the percentage of money that broker should make available for you. If you want the broker to make available all your money for executions, is on the leverage. So when you select a lesser leverage, you have a lesser chance of opening multiple trades. When you select a high leverage, you have more chance of opening as many trades as possible.
Okay.
Like now, you have 237 remaining. If your leverage is low, it may not you may not be able to open another trade. So even when you want to open, they will give you a sign not enough money. Now let's do another thing. If you want to open another trade, you see that your margin will keep increasing. Your free margin will be reducing. Your marginal level or margin level will also be reducing in percentage. Okay. Now, you see how you have made a very high risk investment here, but the investment have not gained, but you're already on high risk side. If this investment should gain, you can make 50% in an hour. Something can be done when it goes against you. Yeah, this is what is called high risk trading. But now, for the purpose of this practical, we are not talking about risk management here. We're talking about the relationship between margin and equity
free margin and margin. Now, let's close one position. Click on your profit side, go up. So you're getting $6. Close that one, you're getting $6 on. $6. Yeah, close it.
Okay.
So okay. Say accept. Click on that accept position.
Okay, yeah.
So okay.
Okay.
Just double click on the swap information under it. Double click under it. You know,
Under here.
go up. You know you are very slow. You go up, then go right. Under your $6. Under your $6.
Okay.
Then go left. Go left. No. I didn't say you should scroll down the profit side.
Okay.
Scroll up on then yes, then double click. Just double click anywhere there. Double click. Yeah. And then they click on the yellow line. Yeah. Yeah.
Okay.
Then scroll down. Professor. Then what do you see now on your margin?
My margin now is 360.
What was it before?
It was 230.
It was 760.
Okay, 760. Okay.
Yeah, have you forgotten? Yeah.
Yeah, 760.
Yeah, it was because you have left the market. You have left some part of the money back to the market, off the market. So you have more money reserved.
Yes.
Now your free margin has gone to 637, 639. Then your free margin, my margin level has gone up to 277. Now go up. Let's do some part of the profit. Go up. Scroll. Yeah, scroll up on your profit side. So close the $3 profit.
Okay.
I don't know which one was that. Yeah, it's closed that one. Yeah. Have you closed it?
0.10.
That was a $3 profit. Okay, we close that one too as well. Then scroll down. Then can you see your margin now?
Yes.
What's your margin now?
My margin is 100.1. Okay.
$100. Then what's your free margin?
My free margin is 899.
Well, so what is your margin level?
999.70%.
So what is your observation? Did you observe anything that happened?
Yes, the trade I closed now. Okay. The position I closed added more my free margin.
Yeah, so
somebody has returned back there.
Yes, so
that trade that was done.
Yes, the margin that kept them running has been returned back to you.
Exactly.
Because you have closed those positions and you now have more money, which is more free margin to trade.
Yes.
And so remember, and your margin level in percentage now increased.
Yes.
So basically now what you have in the trade is $100 that is trading. Even though your profit is $1. Do you understand?
Yes.
So now you see that they say how we use almost all our money to place a trade. That's 760 was already into trading. Some people who doesn't know how to trade will be looking at the balance, saying I have $1,000. And they don't know that 760 are going into trading. Okay. Do you understand?
Yes.
They just be making noise. And I woke up, I see nothing. So we say $1,000, $1,000. I woke up, I saw 10,000. They can't explain what happened. So it's not all about the money. It's all about how the relationship between your margin, equity, and which is powered by leverage. So what I'm trying to get you to understand here is this. Trading is more of margin powered, not balanced and equity driven. Yeah. So when you have more money and you want to maintain good risk, it's easy. Then now you see that because you have more reserve money. Why you're trading? Let's say now you want to trade with only $500 margin. So we can use a little volume and open that trade, and you may have like $5,000 balance. So basically, what you're trading is just 10% of the entire money. And a volume of position that will be required $500 margin will give you a good amount of profit a week. While you have more reserved. Then the one.
Okay, so do you guys hear something there?
So, Mr. Uche, and when you have that free margin left aside,
Yes.
and you open a position that is really going against you, or you have enough free margin. If that position takes maybe 2 weeks, 3 weeks, your free margin will secure your account.
Yeah, perfect. So when we want to do this assessment on account on a trade that's open, we check those things. Then we'll now check where you put a stop loss in the market. So when we check it, we'll try to know if what's gonna be the amount of more of that stop loss, if the stop loss is gonna like take more or not. So if it's not gonna take more, then we allow it to run. So the first thing we consider in setting up risk or stop loss is the margin percentage already, the money that's into the market, which is the margin first. Like for example, some traders are encouraged to put stop loss within the margin, not within the free margin. Let's say what I'm sharing with you now is like $100 margin. So let's say you want to put a stop loss, they might ask you to put a stop loss between $50 or $100, which is also within the margin you are trading with. Do you understand?
Yes, I got it.
So using the concept, are you seeing the possibility or impossibility of having excessive losses? And the possibility of not having excessive losses when you are trading?
Yes.
Now, I think I'll pass the major information from here. So I will stop sharing it and go into another this thing, another another topic. Now, let's do our own practical here. So now this is $113,000 account, and which market is this? Okay, this oil market is going up. Oil is doing well. I think there's a problem in Iran that may push the market more up. Now I'm using 10 lot. Fini, this 10 lot means could be also called volume. It determines how you make your profit. This is a unit I'm using to trade. And in the oil, it will be giving me $100 profit. And that's what is called lot size. Trading is done on lot size, Fini, and they pay me. Then assuming I use one lot, because I want to place a buy trade here. Assuming I use one lot to place this trade, it will be giving me $10 because it's 1 unit on oil. But if I'm trading it on Forex, This one lot, 1 unit I place here, this one here, it will give me just $1. But if I put $10, it will give me $10. In fact, any figure I put here is what it's gonna give me. Because of commodities requires more money, and the broker also requires little bit of margin to place the trade. So now I'm buying oil, and the price I'm buying oil is what is called instant execution. That's instant market price. I'm not buying on a price that is not here. If I want to buy a price that is not here, I will use what is called pending order or limit order, where I may choose to buy at 70 or 69, or I may choose to buy at 65. That's what is called limit order. So I will not put it there. What it means that anytime the price of the market get to 65, it will rather buy for me. But if you didn't get there, you shouldn't buy. So now I'm clicking a buy. Please check here. On this platform I'm sharing with you, free margin means free fund. It means free fund. Or while account value means account balance on MT5. So I'm clicking buy. The order is executed. Let me minimize this so that we see the order. Now, the order is executed now. What's time?
9:25 p.m.
Yeah, but something is not displaying properly. Yeah, I'm thinking whether the market is closed because it's not like displaying profit or anything. Are you sure the market is not closed?
It's closed already.
But they should not have even allowed the market to open to the order to be executed. Probably because it's demo. Maybe it's demo. Okay, let me try it here. Okay, say rejected, not enough money, because I cannot use one volume again to buy this thing at that price. Okay. This is also open, but let me check it. It's moving. It's not giving me what I want. Are you sure? Are you sure I opened CFD account? Or this is future? Let me check. It's like this is not CFD. Oh. Are you noticing what I'm noticing now? I need this thing to move, like to display some other characteristics. Like show me available money, available fund. Okay, let me put it on Forex. It's the same. It does not display me margin. It does not show me margin. No. I think okay. Let me use another platform. So at the same time, let me know if you have a question on why I'm opening another platform.
So, Mr. Uche, you were talking about Iran having an issue. Is that is that affecting the market? And I'm talking of oil.
Yeah.
So, like I closed my account yesterday. So, can I go in? Can I go in again?
But it's on profit. I mean, you close on profit, right?
Yeah, I closed on profit.
Yeah, I know. Iran nuclear deal is coming. There's some information we got that there may be strike in Iran. So concerning the nuclear deal. So if you do the striking, the price will go more up. And Iran also want to continue. I've already started the talk. Okay, yeah, I've seen what I wanted to see. Okay, probably the platform was glitching. So because of that, it will move the market more up, more serious up. But we are going to analyze more and send it to you anyway. You know what I mean?
Okay,
We're
I
going to
was
analyze
about
it
to ask
today.
that. Are we buying?
Yeah, we are buying oil since we just existed. Like him left.
Yeah.
We are not left our own, so we are still cashing out.
Yeah, I closed yesterday. I closed the small position I opened yesterday. I closed it again yesterday.
With on profit now.
Yes.
I want to hear that he's on profit. You guys close. I'm sure all of you close on profit. All of you.
Yeah, when I was supposed to close, I didn't close. So I was trying to reach out. Well, I couldn't get hold of Mr. Daniel. So I just put my account on automatic close. So when it hit it, it just went off.
Okay, yeah, on take profit, it closes. Yeah. So this is what I want to demonstrate. I want to close this position on euro. Yeah, I want to close this one on. I want to use big this in order. So now you see that I place a trade on gold on oil. I place a buy with one volume. So and let me do it. Let me close this one. Yeah. Let me use only oil. So I placed a buy on oil. What was taken here was $5,000 margin, just with one lot. Some of the broker can take 2,000, some can take 3,000, depending. So if you're using a broker, especially exchanges-based broker, like as you can see, this order is coming from New York Stock Exchange. So you will try to know what they are giving you, what their margin is. Sometimes you may charge them, you may not even like to charge them, you may just try the demo. The demo will tell you exactly what they're giving, because once they're regulated, they will never change it. Now I'm using 10 volume or 10 units. I want to place another buy again. Now it has entered. So I using my margin 55,000. Now I using my free fund, which is my free margin, 57,000. Do you know the reason? It means more of my capital has been taken to hold my position. And now, because I bought with more unit or more volume or more lot size. So now it means here I'm gonna make more money should this market move up. Like look at what I was charged as commission. I was charged $73 here as a commission. So should this market move up, I'll be making a lot of profit, more than what I would have more than what this market was giving me. Now let's say I want to buy again too. It has entered. See, look at my margin. $105,000 has been taken. And my free margin is 7,262. Are you seeing that I've used almost everything in, and I don't have. So now, is this guy still here? The person asked me that question. Where's your name again? Yeah, Kelechi. So Kelechi, I think you're still here. So now this is $6,000 left. So what will happen if I have minus $6,000? All my trade will be closed immediately. And as you can see, so the more profit I'm gaining, the more the margin, the free margins start increasing. Do you understand? Unless if broker doesn't want to close it. Once I don't have any other margin here, I will start having a call, like an email that I don't have enough money. Won't I consider closing some of my position so that more money can be returned back to me? So ideally, I can choose to put SL or TP, set up all this TP, take profit using what I've already placed. But now this is what we call high risk trading. When you see those things they share with you on internet, where somebody double money, make massive income, it is because of the kind of unit they are using, the kind of leverage they are using. So they are like going into the market with almost everything. So what this means is that if this market move up, I'm gonna make mad profit because I'm using bigger volume. So now let me close one. Which one should I close? Let me close this one that's getting 1,000. Let me close it. Okay, it's net profit. Yeah. I've closed it now. So, okay, it didn't close. Okay, it's like a net profit. Let me close this one that's getting 400. I'll close it. Then you see that half of my margin has been taken, has been returned back to my pre-margin automatically. So if I close another one again, you see that it has also been returned, more have returned. And now I have $63,000 left.
Wait.
Do you understand?
Yes.
So this is effective tools you need to manage your risk. Any question? Any question?
I need more time with this.
Yeah. It's recorded. We'll send it to you. We need to have a class with you to put you through on some other things. Yeah, we need to have a class with you to put it on some other things. I don't know how
Okay,
your timing is. I don't know how your timing is, so we could put you through. We also need to send you some videos. You could watch. Any question? I think everybody's quiet. Are you okay? So in conclusion, we're all trading. So our analysis on oil is still valid. Those who are already on oil, so we have cash out. We have made a lot of profit on oil. From here we made almost like 600 pips on oil. The Brent crude is of course is similar amount of 700. That's we have made 1,200 on oil. So we have analysis on gold. It is still valid. Our gold analysis is still valid. So let me go back to daily. It is still valid. We are buying gold for a long time, so we're not selling. Though we are believing that there may be sharp drop, but don't care much about those drop. Focus more on bigger volume. Then we have analysis on Euro US. I think Euro US is no more valid. Let me check. Yeah. So Euro US is no more valid. But we are going to look for a new position on Euro USD to enter the trade. Like second position. But that first one is no more valid because it has hit our resistance, which is here. Most likely here is our resistance, and the market has gotten to that point. Which other place are we investing? I think okay, yeah, we have investment. We are investing here. Yeah, so it has dropped a bit again. So people who are still investing in this market, you have chance of making a good amount of return because it's still there. You know, it's for a long time. This is a weekly chart. It's for a long time. It's not for a short time. So let's see how far it will go. If you still want to come in, you still have the opportunity to come in and make profit from it. Then we have our risk. We have our risk within this level. So if you want it, you can be able to participate in it. So this is where we end it now. I'll spend more 8 minutes of your time. I don't know if you have another question, please.
Yeah, my question is Euro USD. You said it's no longer valid.
Yeah. It's no longer valid because it has hit our resistance. Yeah, unless if you want to adjust the SF, because it will drop, but it has hit our resistance. We'll look for another entry, which is called second entry.
So are you saying I can because I entered 1.1552.
Yeah. Put your SL, leave it. If you enter, leave it. But on this time that we're expecting a drop here, it's not more valuable, but it will still drop. So if you have put it there, just leave it. It will definitely drop too. But that one we are analyzing using the resistance is no more valid because it has broken the resistance. Yeah. So if you have a good price here where you entered it, leave it. It will definitely drop. It may exist now after like a couple of days. Then the market will not drop for profit. Yeah.
Okay, so your advice as it stands right now, we can place buy on oil.
Yeah. Oil is buying most likely going to go like rise more. We are getting some other information on it. I don't know, but I will give you more concerning Iran. There's something coming up in the Middle East issue. It's gonna push the price oil more. You see, it's Iran declare in breach of nuclear non-profitable obligation. So there's a lot of conflict coming up in Iran. That is going to push the price on because that's where I was reading some details. It's most likely that Israel may strike Iran if they go into the nuclear stuff. So they may escalate their issue, and which will cause the price of oil to now skyrocket. You know what I mean? So there are more bullish sentiment in Iran than oil. Which one is this one? It said, what are Iran and Russia really up to in the Caspian Sea? So there are some things coming up that's making the price of oil to keep going up. Yeah. So this is Iran speak out following IAEA resolution. The International Atomic Energy Agency passed a resolution declaring Iran non-compliance. So these are the things. So they're not complying with it, and they want to go into their project. So all this is what we look out for in investing more in oil. Yeah, for those of you that are learning, you could use automated system the automated platforms to make profit while you're learning, so that it will be easier for you to be making money while you're still learning. It's a one stage to another, one stage after another. We'll be here to assist you. Any other question? Okay. I think we'll end it here now. If you have more questions, if you need more help, feel free to contact us. We'll be able to assist you. Yeah.
All right.